Today we discuss about, I'm changing my strategy towards crypto, here is why. Let's start the video. Yeah, so this pattern, and you guys can see my chart here, it's basically a large bear flag, or in the spirit of a bear flag. Now that doesn't mean that it's going to go straight down. In fact, I have a short-term micro breakout here. You can see this down sloping yellow trend line right here, and again we broke above it. We're holding above it. All we have to do is take out 17,000, and I actually think you're going to get a short-term rally to the upside to about 18,400. So I actually am very short-term bullish, but you can't deny the bigger pattern here, which is still bearish. And therefore, again, I still have it priced in that we're still a few months away from a bottom in Bitcoin, and it probably has a decent amount lower to go. Gareth Soloway was one of the only traders that not only called the top of the crypto market in Q4 of 2021, but he's also been extremely accurate on the move downwards as crypto has fallen. In his latest interview, he reveals exactly his investment strategy going into 2023 and why he's one of the only analysts that believe we have much more downside to come for Bitcoin and crypto over the next few months. Make sure to stick around to the end of the video where Soloway reveals the exact date that his best guess is when crypto will truly bottom in 2023 based on investor psychology and past financial cycles. Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing, liking the video. It's free and you can always change your mind. Yeah, so I think it's the beginning of the end, right? I mean, you have FTX hammering the market, but I think one of the important things to take away from FTX and the collapse is that if you look at the Terra Luna collapse that caused Bitcoin to take a hit, Bitcoin dropped 45%. The FTX collapse, which was much bigger in terms of an earthquake for the crypto sector, you only dropped 25%. So, what this is a market that still probably has some flushing out to go, but it is getting close. There's no doubt about it that we're getting close to it. We're also getting closer to potential regulation, which I think will be a huge asset for Bitcoin and cryptocurrencies, at least the Bitcoin and cryptocurrencies that are strong out there, as I do think that that will be an avenue for big money to start to dabble in crypto again, absolutely. So I'm still looking at potentially 12,000 to 13,000 as a short-term target. I do believe it'll go lower than that, and probably pierce 10,000 and could get as low as 9,000 before this is all over. So again, if you look at it, there's a couple ways you could look at it. At the half full, the glass is half full, which is the negative, which is, oh my goodness, it could still go down 30 to 40% more. Or you could look at it half full, which is basically saying Bitcoin's dropped from 69,000 to 16 and change here. In the worst case, it's got another 7,000 and change to go, and then we can start to think about really picking some up heavily and looking for some major upside. Yeah, so this type of pattern, and again, you could even make a case that this type of pattern on the chart, this is a cup, and this would be the handle formation. So basically, I am bullish near term, and I know that sounds weird to people when I'm saying yes, down the line it's going to go lower, but remember, I'm a trader, right? So I'm looking over the next 1 week or so, and over the next 1 week, I actually expect a move to the upside, as I think again momentum will come through. And if you think about it, we heard about Silvergate, we've heard about GBTC, and we were going to talk about that in just a little bit. These aren't having a negative impact on Bitcoin right now, and that actually tells me that there's bullish potential price action. When a stock or a crypto doesn't fall on bad news for a sector, oftentimes you're getting ready to make a short-term pop. Yeah, so I think for me, what's important about how Bitcoin is reacting or not, or lack thereof, reacting to the negative news tells me that the negativity on news-related information is pretty much in Bitcoin's price, and that's really amazing to think about. I mean, it would take a huge epic earthquake bigger than FTX for it to have a big move down. So at this point, that's in. That bottom is in. What I don't think is in terms of the bottom for Bitcoin is when the stock market begins to really collapse more, and we talked about this in December at the live event, we talked about how I still think that there's another 25% down on the S&P in 2023, and I think that's going to be the kicker of how we get down to the targets that I've mentioned. I don't think it's going to be another kind of earthquake. We're seeing them like you said with Silver and Gemini and Silvergate, and all these other things going on. That's not having impact. People are immune to that in a weird way, but it's going to be when people get really scared in asset prices like stocks that they're going to ultimately end up selling crypto and driving it lower. Yeah, so you're right, private sector jobs numbers came out much better than expected. We know that the Federal Reserve released their minutes earlier this week and basically said don't expect any rate cuts in 2023, and the markets didn't like that. The markets, again, this is hawkish talk. This is hawkish economic data on jobs, the key today, and this is why the markets rallied back on the non-farm payrolls number. They basically were throwing a bone in that wage growth has slowed, so again, who would have thought that saying, oh, people are not making as much money, or the amount that they're making in percentage terms is coming down a little bit. But that was the first sign that maybe there's some weakening in the labor market, and the market's just ripped higher on that. Now, I will say this, is that ultimately the market is going to like weak data, until we get to a point where we see a recession. And then, when the Fed does not come to the rescue, the markets will freak out, and that's my base case for this year. I think by the second to third quarter, we see ourselves in a recession. The market and investors will say, hey, Federal Reserve, we're in a recession. Can you start cutting rates? The Fed is going to say, nope, we can't do it yet because inflation is too high. We don't want to see a repeat of the 1970s where they cut rates too early and then inflation surged back. There's no reprieve for at least this year. The only way we get a reprieve is number one, if inflation miraculously goes back below 2%, and then the economy weakens, or if the economy weakens so dramatically that we see like 10% unemployment. Then I think the Fed might be forced into stimulating things at that point. But right now, what if they don't raise rates anymore? I mean, restrictive could just mean they can keep rates at an elevated level without bringing it down. What if they don't raise rates anymore and just don't touch it? Would that still be bearish? Well, you're going to get the short-term relief rally, right? So right now, the markets are pricing at least a 25 basis point rate hike coming up, maybe at least a couple more this year. I don't think there's much to go, maybe a little bit above 5% on the Fed funds rate. But the bottom line is at the point where they say, hey, we are done raising. We're going to go into a pause mode. The markets will see a very short-term pop. But again, it's going to be short-term because as economic data starts to get weaker and weaker, and it is, you can see again more layoffs every single day. Amazon just announced that they were going to lay off even more people, so it is coming. The wave of a recession is on the horizon, and it is going to smoke the US here. And when we get into that point, the Fed is not going to be cutting rates right away, and the market is going to throw a big fit. So that's correct. It's still bad. News is good news right now for the markets, and that will be the case until the Fed stops hiking rates. So again, the market wants to know that there's an end to the rate hikes. The next phase will be back to bad news is bad news because ultimately the Fed is going to stay strong on not cutting rates, and that's going to cause an issue when you have bad news on an economic recession. And again, the wealth destruction is unbelievable, but it all goes to the narrative of the Fed saying they wanted to suck out liquidity. They wanted people to not feel so rich so that they couldn't just go compete for all the goods and drive prices up. All right, so let's finish up on the stock market before we move on to the last asset class. So what's your medium to short-term outlook for stocks? SPY? Yeah, so here are the spiders or the S&P 500. You have a bear flag formation, beautiful update today. I have a target for me to start shorting the market when we retrace to this level right here. And again, you can see that we hammered on this line over and over again. We'd finally broke. Then you should trade back to that level. And then I'm going to start shorting the market heavily at that level. I expect the next wave of selling not only taking us to the October low, but actually we should revisit the COVID pre-covered high pivot, which is around the 3,400 level on the S&P 500. That's just a stopping point this year. I think overall we're headed down to this longer-term trend by late this year, which is probably around 3,000 to 3,100. So let me know in the comments. Anyway guys, hope you all enjoyed today's video and that provided you some value. I'll see you all in the next one, and as always, all the best.